All right, let's jump right in. We're going to be breaking down some major, new tax rules for micro businesses in Romania that are kicking in for 2026. If you're running a business there, you absolutely need to know what's coming. No, seriously. If you're running a small business in Romania, you're going to want to listen up. The tax code just got a pretty big shakeup thanks to OUG 8/2026. And trust me, these aren't small tweaks. You really can't afford to just let this fly under the radar. Okay, so let's get into the details. And the first piece of news is actually pretty good. It looks like there's some new flexibility being introduced, which is great news, whether you're just launching your business or maybe looking for a do-over with the micro regime. You know that crazy 30-day scramble to hire your first employee right after setting up your company? That feeling of the clock just ticking down? Well, good news. You can finally take a deep breath because that pressure is easing up a lot. I mean, look at that. It really says it all, right? You used to have just 1 month, 30 days to get that first hire on board. Now, that's been tripled. It gives you a much more realistic time frame to actually find the right fit for your team. Yep, 90 days. This is such a game changer for new founders. It's not just more time, it's crucial breathing room. It means you can focus on finding the right person, someone who really fits your vision, instead of just hiring anyone to beat the clock. And the good news keeps coming. So in the past, if your company left the micro enterprise system for whatever reason, well, that was pretty much it. Door closed. But now you can actually get back in. As long as you meet the conditions again, you can opt back in. It's like a genuine second chance. All right, let's shift gears and talk about our second big topic, revenue. Specifically, how you calculate it. Because the rules for staying under that all-important €100,000 threshold have changed. So what does this actually mean? Well, the big takeaway here is that things are getting standardized. Instead of some quirky definition buried in the fiscal code, the threshold is now based on your turnover, as it's defined by normal accounting rules. This should, hopefully, make things a whole lot clearer and more consistent for everyone. Okay, but here's where it gets a little tricky. And this is a brand new rule you absolutely have to get your head around. What happens when you sell off company assets? Like a company car, a piece of equipment, maybe even some land? How does that fit into your turnover? Okay, lean in for this one because the rule is super specific. The very first asset you sell during the year, the money you make from that does not count towards that €100,000 limit. But, and this is the key part, the moment you sell a second asset in that same year, the revenue from that sale and any sale after it does get added to your turnover. You have to track this like a hawk to make sure you don't accidentally tip yourself over the edge. Now for our next point, which is, well, it's a very human one. It's a change that basically recognizes that, life happens. Things come up that are totally out of your control, and this new rule provides a bit of a safety net. So picture this. It's a scenario that happens all the time. You've got a micro business, and it's just you and your one employee. What happens if they get sick and they need to take an extended medical leave? Before this change, that could have been a disaster for your business. Because their contract was suspended, you technically wouldn't meet the one employee rule anymore, and you could get kicked out of the micro regime. Talk about a massive headache when you're already stressed. But thankfully, that's not how it works anymore. So here's the new safety net. As long as the total medical leave for your employee adds up to 30 days or less for the whole year, your status as a micro enterprise is totally safe. You're protected. Okay, so let's pull all of this together. We've covered a lot. What does this all actually mean for you and your business? So here are the big things to remember. First, you've got more time, 90 days, to hire when you're just starting out. Second, there's now a way back into the micro regime if you've left. Third, and this is super important, you've got to watch those asset sales very carefully. Remember that second asset rule. And finally, you've got a new 30-day safety net for employee medical leave. So yeah, it's definitely more flexibility, but it also means there's a bit more you need to keep track of. So the big question now is, with all these new rules and this extra flexibility, what's your strategy going to be? How are you going to use these changes to your advantage come 2026? It's definitely something to think about.